let's get things started. So, my name is Brad with Tavant. I head up our prop tech real estate division, and I'm the head of marketing at Tavant. But this is to talk about something that honestly I don't know that much about. I told my wife this morning what I was speaking about, operations, automation, and she goes, "You know, you're the least efficient person I've ever met in my life." And I said, yes, that is why I'm bringing Duar and Tony up here to talk with me about this topic. So, good to see you all. Brad from Tavant, recently moved from Santa Clara down to Carlsbad. The pandemic had things work in my favor now that we can work remotely. But Duar, why don't you go first? Introduce yourself a little bit.
Yeah, hi, my name is Duar Alimi. I'm CEO of Lender Price, and I think my wife feels the same way, so.
All right, Tony.
I'm Tony Wynn. I've been in the industry for a little over 2 decades and really heavily focused on imaging and automation. I'm the Chief Product Officer.
All right, let's get things started. So the past 2.5 years have been a challenge, different, all these things. Tony, in terms of in your team, how you've done things, how has the past 2.5 years of people working remotely, working from home, how has that shifted, A, your team dynamic, but then B, really encaptures dynamic as a company?
Yeah, I think at a base overall, it's impacted us slightly in the sense because we were always a heavy development shop, so a lot of our resources worked remotely. I think what really has impacted us the most, though, is in the traditional sense, our customers now. We couldn't do on-site visits, walkthroughs, understand their processes in detail in order to really kind of paint the picture of an automation journey to help them out. So just being fluid to adapt to the whole Zoom or WebEx with our customers really had to shape up. And honestly, we had to be a lot more detailed in those conversations versus on-site.
All right. Duar, same question, different angle.
Yeah, so for us, I mean, we were founded in 2016, so our entire platform is cloud-based. It's all in AWS. So for us, it was relatively easy to get everyone to just work from home. And we were probably one of the first ones that I know that we actually did it really successfully. When we created our entire organization, we made it so that we can have engineers work from home whenever they wanted to. So that was great. But going back to what Tony said, having face-to-face interactions with our clients is a much better way to communicate with them and showcase our solution. Zoom has definitely done a fantastic job, but I think one of the hardest parts with Zoom and with GoToMeet and then all the different platforms is you never know which one of these platforms are used by some of your clients, because some of the banks now they're used to Zoom and we like GoToMeet, so we've got to ask them beforehand, well, what do you prefer? So we have, so we have all of them at our disposal.
Got it. Great. No, awesome topics right there. Tony, the word hyper-automation. So fad or future?
Yeah, actually, hyper-automation is actually a term coined by Gartner through its technology trends. And if the audience here has looked at the various reports, every year Gartner releases their top technology trend. And if you really focused on the trends out there, hyper-automation has actually been on the top 10 listing of Gartner's report for the past 3 to 4 years. So it's truly relevant. And the term hyper-automation really is a higher level parent than automation, because automation is really a term that's really kind of loosely coupled. I mean, Duar and I were talking backstage and last night talking about the differences between automation, because clearly Duar's organization provides a different level of automation than what we provide in-house. We are more of a document-centric focus, but really the term hyper-automation, really the concept and approach is really anything that can be automated should be automated. And it's such a simple term, but if you look in the landscape of the lending life cycle overall, from the front office aspect of origination to pre-underwriting to your document-intensive processes for post-closure home or even the pricing side, it's riddled with a lot of human-centric tasks. And really, you need to focus on one particular task as an organization to really understand the low-hanging fruit, to really automate that component, and then hopefully you can spread that throughout your organization.
Got it. Duar, lender, price. Two key words there, lender and price. Let's throw the word automation in there. What is automation actually doing to the price of a loan these days?
Yeah, so if you look at our organization, I mean, like, automation is one of the things that I think I push all the time. If you look at our back end of our application, if you look at legacy pricing engines today, there's still a lot of manual things. Like, it's amazing how oftentimes I hear, lenders that use these, legacy systems, and they go, well, how do you deal with price concessions? We use email. So how do you automate that? So what we do is that we automate, most of our backend is, automated. A lot of the features and a lot of the functionalities that our pricing analysts perform today is automated. We use a thing called natural language processing in order to add rules, loan level price adjustments, eligibility rules, MSR, margin management. That's automated. We also work with our clients and banks to figure out how we could actually ingest LLPAs, margins, et cetera, in an automated fashion. So for us, it's all about automation, because as an organization, we're much smaller. And the question is, how do you manage products, pricing, and eligibility for 200 plus lenders with such a small team? The only way that we can do that is through automation.
All right. So let's spin this a little differently. So let's say we have Talia in the audience, and Talia is a venture capitalist, and she has $100 million, and she is going to invest in your companies. Duar, first, what would you do with $100 million infusion of cash?
Yeah, I think that if you, and for folks that have listened to me before, if you look at the mortgage industry and if you compare that to an iceberg, and you've got this iceberg that's immersed in water, at the very top of the iceberg is what we've been focusing on lately, which is a lot of the point of sale, applications out there, and digitizing the intake of loans. What we haven't really tackled is everything that's underneath, the fulfillment, the manufacturing side, because that's what drives the cost of loans up. The last couple of years when the refi, during the refi boom, underwriters were getting, signing bonuses. Loan officers were getting signing bonuses. There were, and that piece alone, you still need a lot more digitization, and you need to figure out how do you streamline that process, because when you do that, you can lower the cost of loans. Compliance has increased it, regulations have increased it, technology has decreased it, but we need a lot more.
Yeah. Tony, same question. Talia's got $100 million for you.
Yeah, I mean, 100 million seems like a lot
Well,
of
fine.
money
Talia's
to
only
spend,
got
but
20
I'll
million
tell
for you then. I don't know.
As a CPO, I would tell you, I mean, there's always ways to make our product better. I mean, we pride ourselves in having a modern digitization platform that can accommodate a wide range of documents, because we are solely focused on just the document automation aspect, whether it's, again, the front office aspect or the back office aspect. We also play in many other spaces other than just mortgage. We're in the commercial lending side, the fintech lending side, numerous different sides. But it's really rounding out and taking that investment and probably building product-specific use cases to meet all the demands out there. And really, we just tackle today the four core pillars within mortgage when it's document-centric, but I would clearly love to tackle the other use cases altogether.
Yeah. So with that, when we talk about what we do in this industry, and I have this problem or this challenge a lot with Tavant as well, we all solve problems in the loan ecosystem, problems that we're solving for loan officers, problems we're solving for companies, but ultimately we're all talking about the same home buyer. And most of us in this room have bought a home, and it's a painful process. And there was a 2017 survey that said the average American spent more time searching for a flat screen TV than they did their own mortgage. So when we talk about all the things we do, and Tony, I'll throw this one back at you first. How are we ultimately making home buying easier or more transparent, or what are we doing to help that home buyer?
Well, I think a lot of our customers, mortgage providers out there today, have really truly went to a digital experience. If they're not in their digital experience today of really controlling that whole front side of the process with POSs in there, right? Whether they're homegrown or off the shelf, they're providing that robust experience up front, okay? Which has really blended itself to really kind of seamlessly showing that it's a digital transformation within an organization that's taken this journey. And ultimately, with that said, it's going to provide that robust experience. But although it is seamless in nature, there's still a lot of manual processes, believe it or not, behind that digital world. And let's just kind of talk about some of those. So for a front side of a process, being able to auto-validate documents in near real time at the front side of the process. So we really enhance that LO process to not really perform the common stare and compare off a document to validate, did I receive this correctly or not? And then ultimately file that away. I mean, we can automate components of documents floating in. And then even if you're in more of a challenging situation with third-party originations or anything where you truly see all the document types and variations underneath the sun, being able to go through what we call a blob bursting process of bringing in a loan file that could be 500, 1,000 pages and discreetly breaking that up into individual documents and labeling them truly kind of supports that back end. So to answer your question, kind of rounding it out, I mean, I think a lot of consumers really don't get the view of truly everything occurring because mortgage providers have put that digital face in front, but there's a lot of work to be done behind the scenes.
No, very true. Duar, thoughts?
Yeah, so you've got these great point of sale, applications out there. They digitize the process. You're able to upload documents. Then it stops there. Then, our good friend Bill Dallas had the opening session the other day, and he said something that's very important, and it truly fits of what we're seeing today on the pricing side. There's 500 freaking permutation of 30-year fixed mortgages out there. 500. We need to simplify things on the mortgage side. There's so many various eligibility rules. There's so many. I mean, we complicate things in the mortgage industry. We need to start simplifying it. And I see that because I've got lenders that has 1,000 rate sheets. Why do you need 1,000 rate sheets? You don't. But that's the way that they've been doing it for a long time. And what happens is that when the borrower goes through the process and they do all this uploading and then, they're getting statuses and then it just stops. And then they're calling their loan officer saying, hey, this great digital application that you have here, when am I going to close my loan? Because I've got my realtor calling me up and, my wife is bugging me, we've got, the moving trucks going over there. What's going on? Well, we're still trying to figure out how to qualify you. We're still trying to figure out whether or not you can get a loan. So again, I still go back to the whole fulfillment side of things. We need more innovation there.
Yeah, it's a fascinating concept. Not to give too much away, but I worked at Capital One earlier on in my career, and we did an analysis as to why there were so many pricing, essentially, offers in our price sheet. And when we really dove deep into it, we realized that there was a woman, and that was her job, and she had a whole team. And if that team didn't create it, that team was worried that they wouldn't actually have a job. And so it was a self-fulfilling prophecy that didn't really benefit anyone, because they obviously could be deployed elsewhere and do amazing things at a company like Capital One. But they kept doing it for exactly what you said, because it's the way they've done it. Yeah. So utilizing that kind of concept, how do you, in a larger organization, how do you begin to instill a little bit of this change when people are fearful of it?
Well, I think, change is, I think really stop. It starts from leadership, right? You've got to embrace change, and you've got to understand. You've got to make your folks feel that, look, this is a good thing. Like oftentimes you get, technology comes in and people are worried about their jobs. Is this going to eliminate my job? It's not. The mortgage industry is so complicated. It's not going to eliminate your jobs. Like there was a whole fear of like the point of sales. Are they going to eliminate loan officers? No, it's not. Are these automated underwriting engines and different various tools? Are they going to eliminate underwriters? It's not. So embrace change.
Yeah. Tony, let's switch topics a little bit. Let's talk about financing, alternative finance, some of the new trends that people are doing to actually, ultimately, everyone is looking to get into their dream home. There's an IQ and an EQ aspect of it. Emotion tends to override the intelligence aspect that you're paying too much for a property. That would be my rationale for buying something that's overpriced. So when we talk about these new alternative financing things that are coming up, all these companies here, Tony, what's your view on where you would go with that?
Yeah, we're actually in several spaces in the alternative lending arena and everything, because in the heart of our product capture, although it's very highly tailored and focused to mortgage and the sales kit models that we deployed for in the mortgage side, we also play as a generic document recognition platform. So the ability to recognize the document-centric processes of those providers out there has made it easier for us to just leverage our product at a generic level. And so we're in the commercial lending space, fintech space, clearly mortgage, but clearly it's a generic platform that can go across all documents.
Got it. And Duar, we've been talking a lot about non-QM while we've been here. Why is it such a hot topic right now, and why should we care about this topic in 6 months?
That's a good question. Yeah, it's a hot topic because the last 2 years, loan officers have focused on refinances. They've refinanced their borrowers multiple times. There has been very little education as far as non-QM. Now, non-QM is not the same thing as non-subprime as before. We'd love to see how many people here were around during the whole mortgage crisis, but it's different. You've got asset depletion. You've got DSCR. You've got various products. The self-employed borrowers have been completely left out. And the other thing, too, is that, there's a ton of equity in people's homes. I mean, the home equity space, is another great area to focus on. So if you're a lender, focus on other programs that you can offer that for this large demographic of borrowers that have been just left out.
Yeah. Let's switch this up a little bit. Let's transform ourselves to Des Moines, Iowa. The three of us now live in Des Moines, Iowa. And we could buy a house there on a lake somewhere, assuming there's lakes there. But let's say we could buy a house on a lake there for about, $120,000. It would take, let's call it a purchase, 45 days, 42 on average maybe, for us to buy and get in that house for a $120,000 house. We could walk down the street to the Maserati dealership, buy a $120,000 Maserati in maybe 20 minutes. So, Duar, how is that possible in the world we live in?
In terms of like cash?
Not like it's the same amount of money, but one takes 20 minutes to get the Maserati, and one takes 42 days to get the house.
I mean, it goes back to the mortgage industry is just complicated. It's just complicated. I mean, if you look at, you could buy, Maserati real quick because the process is a lot simpler. Here, we've got a lot of regulations. We've got to make sure that we've got, certain documents out to borrowers, by a certain time. We just have a very complicated process that we need to simplify. And digitization is doing that. We're getting there. We see a lot of new vendors here today that's tackling that. Tony's company is doing a great job at that. But it's just not there yet.
Yeah. Tony?
Yeah, I mean, that's an interesting, question that you posed, but, to respond to that, I think there's really a couple of core points there. Duar pointed one of them. There's less regulation involved when it comes to indirect lending of vehicles. the other one that's really important is when you look at holistically at the amount of documents that support a mortgage, depending on your provider, that can be 200 different documents, whether they're homegrown, generated, and third party. Whereas in the indirect lending space for vehicles, you're looking at a total population of less than 50 document types. And in some cases, for indirect lenders for vehicles, they're about roughly on average 38. So if you think about the time on task it takes to process, because in the indirect lending space of vehicles, it does flow through the same process. You go in there, you buy a vehicle, they package and put together a deal jacket that composes about roughly 15 documents out of the population that I talked about. And then in order to fund that document, they do the same process. They have a post-close audit check process where they have to check for that the T's are crossed, the I's are dotted, that the forms are signed. They have to load that information into their LOS as a part of that process, and then fund the deal. So traditionally, in an indirect lending space of a car, for banks out there, it's typically as soon as they get the deal jacket, it's funded in a day or two.
And if I could add to that, we have a thing called an appraisal.
Yeah.
Right? Let's not forget about the appraisal, right? I mean, sure, if you can get an appraisal waiver, that'll help, but that doesn't happen often. But you still have to have them. So there's several vendors out there that's tackling that space.
It's a good space to tackle. So let's talk about the lender sphere for a while right now. So we all follow Housing Wire and a million other publications, but Housing Wire has put a lot of articles out lately about lenders reducing their staff, reduction in force. We could call it being more effective and efficient. Others look at it as layoffs. So, Tony, how do we think we see this shaping out over the next 18 months?
Yeah, it's actually, it's probably shaking up right now as you think about it. Interest rates are going up. Many of the C-level suites, the CEOs that I speak to on a regular basis, I mean, the one thing that's very common, and you probably heard it time and time again, is this mortgage profit compression and how that really is impacting you. And if you read all the articles out there, there's two big points on what really causes this whole mortgage profit compression and being lean about this process. And the first one is, the government and regulations continue to come down regarding do more things. I mean, I think everyone here probably remembers when HOMDA was actually mandated with you and having to report a LAR back every year. And, that creates additional overhead for you to perform your 110 data points in a manual stare and compare process. And then along with regulations, you're having to compete against competition out there in order to keep this trim. And one of the big aspects in order to resolve this is, first and foremost, you have to look internally into your own business processes today before you layer on automation. That is really our recommendation, because you have to fix your foundation first to understand that you're well tuned before you embark on this journey of automation. And then you can do things by adding automation that will provide the same level of services that employees, whether they're in the back office doing a post-close audit check or the home side of things, having a platform being able to automate those manual stare and compare tasks against your LOS, and then really either providing a report back to you to show the deficiencies, where then workers now can really focus on the key task of determining what is wrong with the loan file instead of going through the mundane task.
Yeah, no, very fair. Duar, what would you add?
Yeah, and I think right now is really start evaluating your tech stack. If you got something that's legacy that requires more people to manage, maintain, figure out if there's another solution that can resolve that. It's everything from the LOS. I'm gonna have a shameless plug here for Instillate. Instillate does a fantastic job at actually communicating all this information back to the borrower. Great CRM, but it's really reimagining your tech stack, reevaluating it, figuring out, okay, look, I've got to lay off X amount of people. What can I do? Does my current technology allow me to do that? Do I have to keep all these, these individuals? And if I do lay them off, what's that going to do to customers? To customer service? Are we going to be able to provide good customer service? And if you are not, and if there's a solution out there, get a demo.
Yeah, no, good question. So let's talk about people and what we would do with engineering resources. So at Tavant, we have a slightly different scope, so to say. We have 3,000 people that code 3,000 engineers. They're either in Dallas, Texas, or Bangalore, India for the most part. But when we shift people from a project, we have other projects lined up. So in addition to everything Tavant does, we also like Disney Plus that they built and things like that. If you had to shift, or said differently, if you could double your engineering staff, your coders, not management, your actual coders today, Tony, what would you do with them?
You know what? I think my first priority would really be able to provide a robust SaaS-based platform. In Capture, we are fully SaaS, but there are some aspects of SaaS to make us a lot more profitable regarding updating our code behind the scenes to work in the AWS cloud, leveraging more microservices there to really kind of thin out some of our product and to really diversify where we execute our code base. I think that would be definitely one of them. And then ultimately, I'm an automation geek when it comes to documents. I've been in this space for a long time. I always want to find better, easier ways to really automate documents, because if you look at a lot of the big platforms out there, it is challenging. Mortgage, Duar brings this up, it is complicated, okay? It's not as easy as it seems, and it's really all the data is locked up into the complexity of the documents. And so I would think about investing in how we do things easier for our customers.
All right, and Duar.
I don't really think it's about having a large engineering staff. I've been a huge proponent of, you hear this often, like this bank has 300 engineers working for them, 400, 500. How is this small startup able to innovate and build products much faster with a smaller team? So, for me, it's really finding the right talent, making sure that you've got a good team that works together, and then making sure that they're happy, because there's a lot of poaching going on.
Yeah. So let's think about the next generation. Let's think today's 2022. Are things going to be any different when my son goes to buy a house in 2040? Duar.
I hope so. I hope it becomes digital.
That was the right answer, by the way.
Yeah, I hope so. And I think we're going to get there. We're going to get there. I mean, this is an industry that operates slowly, but we're going to get there. I think that, year after year, you're seeing things, you're seeing technology, whether it's remote online in Iran, you're seeing, a lot of digitization. These are things that just wasn't a focus before. I remember back in 2001 or 2, I think that when IndyMac came out and they had their EMITS application, if for those of you who remember EMITS and Clues, that was revolutionary. We've come a long way, and we continue to come a long way.
All right, Tony?
Yeah, I would agree with Duar here. I hope so. But unfortunately, I would say in 2010, I was sitting there around the office with a bunch of the team members saying, you know what, do we need to probably think about looking for a different job? Because in 10 years from now, it's going to be all e-closings. It's going to be digital mortgages. Coming here 2020, 2022, we're not there yet. So is it going to be another 10 years? Is it going to be to 2040? Hopefully so. I think MISMO, if you followed MISMO standards and everything, it's come a long way regarding the type of things that you will report through that. It's not perfect by any means, but hopefully by 2020, everything will just be pure digital.
Let me ask you a quick question. Who remembers Transbox? Show of hands. You remember Transbox? That's a good example. It went away, right? Now everything's uploaded.
Yeah.
I still have a Transbox box in front of my building that they've never picked up. So if you know anyone at Transbox, tell them to pick it up.
Don't pick it up. Okay, so as we're going on and the conference ends in a couple hours, what was the one key takeaway, Duar, that you got out of this conference? Tony, I'll let you end on the same question.
First and foremost, it's just nice to be at a conference and being able to, congregate and meet up with several of our colleagues that we haven't had a chance to meet up for the last 2 years during COVID. I think that every conference that you go, you learn a little bit, and it improves our industry. The one key thing that I took away from this conference is that digitization and innovation is very important. And in lieu of what's happening, and it's heartbreaking to see, a lot of these lenders laying off people, we have to continually focus on digitization and innovation.
Yeah, I think that's a good segue, because I would have to say that I agree with what you said 100% regarding this. And I would say the one thing that I kind of took away is we traditionally have always went to non-mortgage specific. There were more technical conferences, but what I've gathered this year by just attending mortgage conferences is I like the personality of just meeting people directly here. And again, with COVID and the onset of the last 2 years of conferences of us not attending, it's just a pleasure to be out here to meet customers face to face, and not only customers, partners like Duar. First time I ever met him at this conference, and we kind of hit it off at the bat right at the very beginning. And you know what? Talking to the audience, I felt the same way.
Great, love it. So conferences like this one are hard to put together. Kudos to Nick and the whole production team. There's about 12 people behind us. They do all this great work. But on behalf of everyone who's up there, Duar, Tony, and myself, thank you all, and we'll chat with you after this. Thanks, guys.
Thanks.
Thank you.